Hi, hello friends. Welcome everyone to Super 25, India's largest retail traders online conference. This is Ashok Devanampriya, the CEO of Traders Gurukul and also the host for your today's program. It's a great pleasure to invite every one of you to the third edition of the webinar series. Before we kick off the presentation, I would like to thank our media partner Money Control Pro, the largest financial portal in India, and also our title sponsor Espresso from the family of Sher Khan, one of the leading stockbrokers in India with millions of investors as their customers. The speaker from today is Mr. Jubran Siddiq from Saudi Arabia. He has more than a decade of experience as an ethical investment banker, and for the last 3 years, he has been working on revolutionizing the fintech ecosystem there. He has established the world's first ethical, decentralized autonomous organization with core focus on providing solutions to central and private banks by integrating it with a metaverse. He is a member of the Blockchain Council and Blockchain Training Alliance. All right, quite an experienced guy. He's going to empower us today with a special topic, decoding the Web 3.0 era. Mr. Jubran, on behalf of Traders Gurukul, Money Control Pro, Espresso, I extend my warm welcome to you into the program as a speaker. Go ahead, my friend. The stage is yours.
Thank you so much. Thank you so much for such a lovely introduction. I would like to thank all the participants here for having me here today, and also the team of Super 25 for conducting such an amazing initiative. I've been following this event for the last 16 days, and I see an outburst of amazing knowledge which has been shared by some amazing speakers to all the participants. More power to the Super 25 team. So let me start off by helping you understand what I'll be speaking about today. The topic given to me is decoding the Web 3.0 era. So today I'll be helping you understand some interesting topics which have been the talk of the town for the last 2 years. I'm sure all of you would have been hearing about the words Web 3.0, Metaverse, NFTs, blockchain technology, cryptocurrencies, and many other hot trending topics which is there in the market like DAOs and many other technological terms as well. So today in this session, I'll help you understand where the world is moving towards. I will also help you understand what is the technological trend which we can expect in the next couple of years, and what sort of an establishment we should be ready for when it comes to the fintech ecosystem. So let me start off by introducing myself. I'm Jubran Siddiq, founder and CEO of Zaria Investment Company. I've been an investment banker for the last 10 years. I've been certified in blockchain architecture, hyperledger, Corda, Metaverse, NFT, RegTech, that is regulatory technology, and blockchain as a service. We have recently launched our Zaria X DAO, which focuses on fintech and regulatory technology solutions for private and national banks. We also are currently launching the world's first neo asset-based crypto bank or exchange as well. Let me start off by helping you understand how the internet had evolved in the last 2.5 decades. I'm sure we all remember that the internet was initially established in the early 90s, that is around 92, 94, 95. The trial and testing of internet had started that time. And during that era, we call that era of internet as the Web 1.0 era. That era lasted from early 90s to around early 2000s, that is 2003, 2004. In that era, all we could do was we could only read. I'm sure all of you remember this early AOL, which we used to use in the internet, and many other technologies like MSN, Yahoo. All of this were the Web 1.0 era of the internet technology, wherein all we could do was only read, and we couldn't do any form of changes in the internet. Then eventually came the next era of internet, that is from early 2000 to late mid 2015, 2018. That's when Web 2.0 started. That's when the 2.0 era was at its peak. That's when the companies like Facebook, Google, Amazon, and many other companies took over this phase of internet, and they became multi-billion dollars, and some became multi-trillion-dollar companies as well. In Web 2.0, what was different from Web 1.0? It was we can not only read, we can not only write, we can not only edit, but we can also blog in the internet. So this was the era of content, where people used to collect data. The content was the king of the internet, and whoever were good with the content, they became one of the leaders in the Web 2.0 era. Then eventually towards the late 20, that is around 2020, or you could say 2018, is when Web 3.0 started becoming more famous. During the Web 3.0, you can not only read, you can not only write, you can not only edit, you can not only blog, but you would also own the network. That was the era where you can also own the network in which you're using. Now let me help you understand what is the ownership of network. What sort of ownership are we expecting in Web 3.0? A small example about ownership of network is a browser called Brave browser. I'm sure all of us use browsers, that is Google Chrome, Safari, or any other Mozilla Firefox, or any other form of browsers which you have been using in the past 2 decades, where what happens is generally our data is collected and it's given to third-party organizations like Google, like Facebook, or any other, Instagram, Twitter. These people collect our data and they give targeted ads, and they give targeted specific data related solutions to us. I'm sure many of you would have been experiencing this event where you've been talking about some topic, and immediately you experience an ad which comes in Google or in Facebook which is relevant to the topic. So that's what has been happening in Web 2.0. But in Web 3.0, what is interesting is, in Brave OS, you browse through the internet usually as you go through internet the whole day, and this browser collects your data and it saves in a preserve or in a safe unit, and it helps you earn for the data which you're giving to the internet. So if you're going through the internet for the entire day, or rather you have a company and your employees are going through the internet, that data is collected in a private browser in a safe and secure vault, and this browser pays you for the data which you have been using in the internet randomly for the entire day. Now this is what I would say is ownership of network. This is exactly what Web 3.0 is all about. Web 3.0, having said about Web 3.0, it generally is predominantly based on the concept of decentralization. Now, let me help you understand what is decentralization and blockchain technology. 3,000 years back, there was an island called Yap Island, which is a famous, which is one of the famous artifacts of ancient history, where in Yap Island, there were around 200 to 250 inhabitants. And at that particular point of time, when they wanted to trade, they wanted to create a currency of their own. And what they ended up doing is they ended up making huge 3,000 kgs of limestone rocks, as you can see in the photo here. They ended up making huge 3,000 kgs of limestone rock, and they placed it in different parts of the island. So they made around 30 to 40 rocks, and they placed it in different parts of the island, one in the beach, one in the market, one next to their houses, and every part of the island was established with these rocks. And then what happened is, when these traders used to come from different islands or different continents, and they wanted to come and trade with these people, they used to come to the island and they used to buy, say for example, wheat or rice. When they used to buy this wheat or rice from the traders of the Yap Island, they used to call all the members of the market. They used to make them stand, and they used to say, I so and so from the Yap Island, I'm selling 2,000 kgs of rice to this person at the cost of this rock on the beach. So this was the habit which they generally used to follow, and this habit is called decentralization. Now, how does it relate to blockchain technology? In simple terms, the data which they had shared with all the members in the island, if anyone wanted to hack into the ledger by saying that, okay, this guy had not sold 2,000 kgs of rice, instead he ended up 2,000 kgs of wheat, instead he ended up selling 2,500 kgs of wheat, they need not only change one ledger, but they had to change all the ledgers in the island. This is practically not possible, and this form of decentralization creates maximum and highest form of security. And this is exactly what blockchain technology is all about. A blockchain technology is a type of shared database that stores data in blocks that are linked together via cryptography. A few success stories of blockchain technology. There have been a lot of industries which have started accepting blockchain technology aggressively these days. JP Morgan, Citigroup, Wells Fargo, US Bank Corp, PNC, Fifth Third Bank, and many other banks have started aggressively accepting blockchain technology for its security and for its scalability. BMW has also started using blockchain technology, and many other companies like Microsoft, Amazon, Tencent, Google, JP Morgan, Walmart, and many other companies have started aggressively creating blockchain divisions for them to be able to grow towards the Web 3.0 era. A few applications of blockchain, a use case, where can it be used? It can be used for money transfer and payment processing. It can be potentially be used for ideal and rational applications of blockchain technology, that is for fund transfer from one party to another, that is called peer-to-peer trading algorithm. Then you have supply chains monitoring, that is when it comes to, say for example, you go to a supermarket and then you see this apple which has a sticker on it which says 100% organic. But generally, what if it was a blockchain technology, what you could do is you can just scan the barcode, or you can scan the QR code in the sticker, and eventually you will get to know the seed of this apple was planted on this particular date 1 year back, and this seed grew into this plant, and this particular date the pesticides were done by this particular company, and round 2 of pesticides was done by this particular company at this particular date. The tree started harvesting during this season, and so much of wastage happened, and eventually so much of apples were procured by this company, which ended up going to the warehouse in, say example, Bombay or Delhi, and from there it was distributed to so and so vendors, and then it came in your hand as a 100% organic product. So generally, when it comes to blockchain technology, it gives you an end-to-end solution in regards with the entire ecosystem of things from the start to the end, and due to its decentralized nature, it is also very easy to access and also very secure as well. Including so this is the example of how it can be used in supply chain, and also it can be used for digital identifications, which is very, very important when it comes to KYCs, when it comes to trading, or when it comes to voting, or any other aspect of KYC. Blockchain is one of the most highly used and advanced technologies for digital identification. The next aspect would be how blockchain can benefit all of us. Blockchain has many benefits. One of its benefit is traceability. The second is transparency. Third is auditability. The third is auditability. Fourth is security. Fifth is collaboration, and sixth is efficiency. All of this 6 are the most important factors of blockchain technology. They help all of us in terms of when it comes to the traceability of where the goods are and how the goods started. Say for example, logistics, the shipping, all this can happen through blockchain technology. Transparency of goods in regards to who bought, who sold, and how many goods are available in the warehouse, and many other aspects as well. Auditability, that is how many transactions happened in the last couple of years, how much was wastage, how much was transacted between different people. End-to-end auditability can happen between members in blockchain technology. Security, collaboration, and efficiency as well. So I will not get too technical when it comes to the session. Let me keep it to general so that all of you can understand better, and you can understand the technical terminologies, and eventually if you have more doubts or more you require more detail, probably you can connect with me eventually. A few layers of blockchain technology. I will not, yet again, as I said, will not go too technical into the concept, but let me help you understand how the blockchain technology works. It works in 5 layers, that is the infrastructure layer, the network layer, the protocol layer, the services and option components, and application layer. So these 5 layers together help blockchain technology exists. So there are 4 levels of securities and 4 levels of technological advancements which integrate blockchain technology together. The initial part of it, that is on the outside when you use the app, that is dApps, decentralized applications, application hosting, programming language, and eventually it gets deeper into governance, DAOs, state channels, smart contracts, and then eventually into the consensus mechanism, proof of work or proof of stake, and then it comes to the next network layer, layer 1 or layer 2 protocol, and then comes last but not the least the infrastructure layer, that is mining or proof of stake or virtualization, nodes, tokens, and storage. Now, having spoken about Web 3.0 and then decentralization and blockchain technology, one of the most core and vital important aspect of blockchain technology is smart contracts. Smart contract is basically a self-executing contract with the terms of the agreement between the buyer and seller being directly written in the line of code. In smart contracts, what happens is eventually the contract is created between two parties. Both the parties remain anonymous, and the contract is stored in the public ledger or in a private ledger. Blockchains are of different categories. You have public, private, hybrid, and you also have an open protocol as well. So there are different types of blockchain network. The parties are, however, anonymous. That is given. That is a default structure. But the contract which is stored can be stored in a public or in a private ledger. These contracts are established with a triggering event, that is some set of deadlines, or when it comes to targeted audience, or when it comes to a certain set of protocol, like beyond certain revenue, the contract should automatically execute this much amount of money to go into these particular accounts or anything like that. The contract self-executes as per the written code. As the code is, the contract will work on it meticulously without any hesitation or without any hindrance. The regulators and users of the network can analyze all the activities which is happening in the network and predict the market uncertainties and trends. Smart contracts can be created for trading, can be created for smart trading, can be created for stock market investing. It can also help in many other financial aspects where the set of events are already inbuilt in the contract, and it auto executes based on the situation, based on artificial intelligence, data analytics, or IoT as well. Having spoken about smart contracts, let me help you understand one of the most trending topics, or one of the most trending keywords which has been there in the internet for the last 2 years, that is cryptocurrency. Cryptocurrency is a digital asset or a digital currency which records or maintains decentralized systems using cryptography. Now, there are a lot of myths or a lot of misconceptions when it comes to cryptocurrency. In blockchain, as you understand that the data stored in different blocks, and these blocks are connected through a chain link through cryptography. To help you understand much better, this chain in blockchain is cryptocurrency. This cryptocurrency helps the blocks be connected or integrated to each other, and this cryptocurrency stores the data or the traffic of the internet in its encrypted blocks. A simple example, if I'm transacting, say, XYZ amount to my cousin in some country in France or in Australia, the transaction happens in a couple of seconds. Who is validating this transaction? Who's authenticating this transaction? Who's verifying this transaction? These transactions happen in smart contracts and happens through a mining algorithm. And this transaction from one place to another happens in cryptocurrencies. However, the verification happens to multiple blocks, which is verified by a mining rig. So cryptocurrencies is directly proportional to the traffic of the network. The misconception is that cryptocurrencies generally do not have any value, they do not have any source of value, and they're highly manipulative and they're highly fluctuative. Yes, they are fluctuative. That is because generally cryptocurrencies, the value or the price of cryptocurrency completely depends on the traffic of the network, or completely depends on the usage of the network. If the network usage or the traffic is high, the price of cryptocurrencies generally end up rising. If the traffic and network usage is less, the price of cryptocurrencies also are on a lower format. Yes, it also depends on demand and supply. Say, for example, if you have a very less supply of cryptocurrencies in the market, it can be easily manipulated by people who have huge wallets or huge pockets, which is usually the case in even stock markets as well. The most important aspect of cryptocurrency or the crypto markets, which I would request you to understand, is to understand the difference between cryptocurrency and crypto tokens. Majority, approximately 95-98% of people don't have any idea about what is cryptocurrency and what is a crypto token. Let me help you understand by shedding some light on it. Cryptocurrency is basically like buying a land and doing the entire architecture, constructing the building, probably a multi-story building, and doing the interiors, and then running your office in it. The entire effort involved in creating a cryptocurrency or a blockchain network huge and requires a huge amount of computational capacity, requires a huge amount of manpower, and requires a huge amount of security protocols and security layers, which makes cryptocurrencies more dependable. Like, for example, Ethereum. Bitcoin, Litecoin, many other cryptocurrencies which are available in the market, Solana, Cardano. There are a lot of cryptocurrencies which are available in the market, which makes them safer and more secure when it comes to the fluctuativity, as well as when it comes to data security as well. However, when it comes to crypto tokens, what happens is, in simple terms, it's like going to this guy who has constructed this building, and then you are asking him to give like around 100 square feet or 200 square feet of the newly constructed office with the interiors, and he pays you a rent separately for all the business he does there. So the framework, the infrastructure, the architecture, everything will be of a crypto network, that is a blockchain network. And this crypto token can be made by anyone in the market, randomly just create crypto tokens with some random name, and it can be floated in the market easily, which generally ends up confusing people, and that's where many of the people end up losing a lot of money or end up getting stuck with the fluctuations of the crypto markets. Crypto tokens are easy to make and generally are extremely fluctuative, and generally more have a pump and dump sort of a situation, unless and until they are really backed by some excellent white paper or some excellent company which can be physically encountered with. So this is the most important aspect of the difference between cryptocurrency and crypto token. You really need to understand whether these are tokens or cryptocurrencies. If they are cryptocurrencies, you have to be able to understand what is the purpose of the network, what the network does, what is the scalability, what sort of technological solutions they're providing, and what exactly this network is here to do, and what sort of pain points they are solving. So that way you understand which cryptocurrency to invest into, and what are the long-term perspective or the long-term growth of this particular cryptocurrency in the market. The next aspect of cryptocurrencies is basically stable tokens. Many people generally say that cryptocurrencies are extremely fluctuative and they don't have any tangible assets, or they are not backed by any physical assets, or they are totally hollow and there is nothing which cryptocurrencies derive their value from. It is false, because generally there is different types of cryptocurrencies. You have hybrid, you have stable, you have utility, you have governance, you have DAO coins, you have NFT offerings, you have a huge amount of services which comes under cryptocurrencies. One of the most vital or most impactful cryptocurrency is the stable coins. Stable coins are basically a type of cryptocurrency which provides stable pricing and are backed by reserved assets, that they can be backed by government bonds, they can be backed by gold, they can be backed by silver, they can be backed by any form of reserved assets, which generally helps the currencies to be stable. And the prices do not generally fluctuate of stable coins, because they are pegged at one particular price, and the prices generally range in that value only. Stable coins can be backed by any physical asset, and the value of the currency stabilizes and doesn't remain fluctuative. You can convert gold, silver into stable coins. You can convert the shares of the companies into stable coins. You can convert stocks as stable coins when it's when it is backed by say probably a mutual fund or something like that. So there are so many different aspects of converting assets into stable coins, and this is something where the world is moving towards, where the assets get tokenized in forms of stable coins or in forms of cryptocurrencies, and it helps various people in different parts of the world transact and interact due to the safety and security of blockchain technology. I wanted to share a video with all of you. However, this is a very interesting video, but a brief outline of the video is the entire crypto markets, or the entire outline of the cryptocurrencies generally depends on a protocol called SHA-256, SHA-256 protocol. SHA-256 protocol is it's an extremely secure protocol which helps people secure any data into an highly encrypted code which cannot be generally hacked. The SHA-256 protocol is the underlying technology behind Bitcoin, and this technology gives Bitcoin generally a purpose of tremendous security, and this allows the data to be completely safe and secure. Just food for thought, or something which you need to know. The SHA-256 protocol was initially discovered during World War II, and it was discovered by the United States where the SHA-256 protocol, or the the ancient decoding of the Morse code, which was happening between the Nazis, that is in the World War II, was decoded by SHA-256 protocol, and that helped them win the World War II. So the initial form of the decoding, or the initial form of cryptography, was first established in World War II, and eventually was used by the United States military for the next 30 to 40 years, and then eventually came into the market in the late 90s, and then was initially used by different scientists, and later on it ended up being used by Satoshi Nakamoto to establish Bitcoin, which ended up making it so famous. So SHA-256 protocol is not something which is new. It is not something which has no purpose. It is a tremendous and a highly efficient technology which allows you to secure any form of data or any form of virtual asset into an encrypted code, which cannot be replicated and which is one of its kind. There are different ways to transact with cryptocurrencies. There are two types of equipments which you can use. One is probably a hot wallet. Hot wallets are Trust wallets, MetaMask wallets. Then is cold wallet. That is, you have a high security pen drive, which allows you to safeguard all your digital assets into it, which helps you safeguard it from hackers or any form of technological intruders. Now, as we have understood how the Web 3.0 has evolved, and then how the blockchain technology empowers the Web 3.0 to its distributed nature, and how the Web 3.0 exclusively depends on decentralization through cryptocurrency and the transactions to happen, and how people empower themselves with Web 3.0 by owning the network and by getting paid by it. The most important, the vital factor of the Web 3.0 is the metaverse. I'm sure all of us have been hearing about Metaverse, how Facebook converted its name into Meta, and ended up spending approximately $15 billion last year just to develop a metaversical platform. Accept it or not, but in the next 5 years, Metaverse will be a hugely used technology, because Facebook is planning to integrate this with all its existing platforms like Instagram, Facebook, WhatsApp, and any other platform which they have under their umbrella. So they're looking forward to integrate all of this with the metaverse, which will help people use the metaverse more aggressively and be a part of it. So eventually, we will not be having virtual seminars like this. Rather, we'll be sitting face to face in the metaverse and talking. Let me give you a small demonstration of how the metaverse looks like. So I will share my screen with you. Some of the most important aspects, or some of the most important platforms of the metaverse, is Sandbox, and then you have something called the Decentralization. These are one of the top two famous metaverses. How are people generating revenue through metaverse, and how is that metaverse is already becoming a vital part of the younger generation today? People are playing games in the metaverse. People are earning money through playing games. Before, they used to do gaming tournaments, and they used to, probably the most professional one, used to get paid in the tournaments with the prizes which they offer for the winning team. Now what happens is, these games are launched where people play these games, and every time they play, they get some crypto tokens as fees for them. And as the data network, as network traffic increases, the price of the cryptocurrency increases, and the people who are playing the game and being paid in cryptocurrency, they end up making a huge amount of revenue at the end of the month. This is starting to engulf the youngsters a lot. And similarly, real estate in metaverse is a huge market right now. A lot of real estate agents in the metaverse are able to earn approximately around $15,000 a month just by trading lands to people. And this is no joke. This is something which has been happening in the metaverse aggressively, and people have been making money. People have been doing part-time jobs as receptionists, as bartenders, as anything else, where they get paid salary in cryptocurrency. Land in the metaverse is costly. It's around 1.33 Ethereum, 1.40, 1.39. This prices have dropped significantly in the last couple of years, the last couple of months, because of the market falling down. However, if you want to buy a land in the metaverse next to Snoop Dogg's house, it's approximately around 4 to 4.5 crore rupees already, which has which has risen up from 10 lakh rupees to 4 crore rupees in just a matter of 4 months. A simple way to see how the metaverse works and how the land in the metaverse is, you can go to the map and you can check for different properties which are there available in the metaverse as it comes. Let me show it to you. You also have, as you can see, you click on the map and then you have lands for sale. Then you have premium lands which are available, that is next to some celebrities or some VIPs who are available. You can who have bought the lands, and then some lands click on this and then eventually you will end up getting the map of the metaverse. So this is something which is available on OpenSea, and then when you click on the product, it will take you directly to a network and show you the cost of the land. So these are some companies, Korean companies have taken in the metaverse. These are premium lands which are available in the metaverse, which are already been taken by some well-established people. And the green parts are people lands which are not for sale. Premium lands are people which are selling these lands from a premium value, say probably 10x or 15x from what they have bought. So these people who are selling lands in premium are people who generally buy bulk of lands in metaverse, and then they sell it after a couple of months once some big people buy these lands in and around the area, and this helps them escalate the price of the plots in the metaverse and to be able to sell it at a premium value. This is something which is called minting of land in the metaverse, which is becoming a huge market and a huge trend, and has become hugely successful for a lot of people. And people end up imagining metaverse should be such a place that they feel that if they do not buy the land right now here, eventually it will be like missing out on a huge opportunity or a huge land in a prime location in the metaverse eventually if they want to make an office for themselves. Similarly to Sandbox, you have something called Decentralized, where Decentralized allows you to have an experience of the metaverse by being a virtual walkthrough. So you go here inside Decentralized, you click on which particular event you want to be into, and then you click here, and then you can probably press E, which allows you to enter the place, and it allows you to be a part of it. So you click jump in, and it eventually helps you jump inside the network and helps you with the rush. So I hope all of you can see this. So this is something where as you go inside, as you explore more opportunities, as you see different things, your data is collected and they pay you for your data which you're using in the decentralized or in the metaverse through cryptocurrencies in different forms. So decentralized has its own cryptocurrency called Mana, and similarly Sandbox has its own cryptocurrency called Sand. So people use these platforms, and the more they use, they get paid, and eventually this will be integrated with Facebook and many other platforms where people will be able to access all of this through VR Oculus. So you can see I can walk through the metaverse here, and as I'm walking through the metaverse, I can enter different places. I can enjoy the architecture which is here, and this is just like playing a game. However, there are more advanced forms of metaverse which is available. This is just I'm trying to show you something which is basically available because this takes a huge amount of data and internet. So you can go here and you can also, for example, if there's a simple example, jewelry showrooms can be made in the metaverse, where people can go into the metaverse, see the jewelry and want to buy it. They can buy it, watches, garments, anything and everything. So basically Walmart has also entered the metaverse where you can buy and sell goods in the metaverse itself. So this is a rough outline of how the metaverse works, and this is exactly what many people are starting to use right now as the Web 3.0 era. Coming back to our presentation in regards with metaverse, one of the most important aspects of the metaverse is the next technological factor, or the next technological revolution, probably I would say, is the NFTs. NFTs are something which has become a viral trend in the internet, and it's one of the most successful products of the Web 3.0 era. NFTs, in simple terms, are non-fungible tokens, which is a unique and non-interchangeable unit of data stored on blockchain. It is also a way of proving ownership or a digital ownership of an asset. In simple terms, let me help you understand why NFTs came into existence. and what sort of a benefit can NFTs provide. So I'll try to give you 2 or 3 perspectives to it, and this is something which will help you all make a passive source of revenue. NFTs in simple terms could be your okay, let me put it this way. Say for example, there is a VIP who owns a yacht, a super boat, which he generally keeps it in the beach in Dubai or in Saudi. They own a yacht or they own a mansion, which is huge, and they don't use it because they are basically they're very rich, and at the end of the day, they probably would use it a couple of times in a year. So what we can do is we make NFTs out of this yacht. And this yacht, say for example, is worth around $5 to $10 million, which is hardly very less. Generally, it's worth anything above $50 million. But just for the $1 million, we can make 10 NFTs out of it, or 5, depending upon the requirement. And we make, say, for example, 10 NFTs out of it. And each NFT is valued at around, you could say, $350,000 or $400,000. So by making 10 NFTs, we are talking about a value of NFTs, which is raising the money of $4 million in the market. Now, why will anyone buy these NFTs? Which is linked with the super yacht. In simple terms, if I am buying this NFT, what happens is, if I am the creator of the super yacht, I make an NFT with an inbuilt smart contract mechanism, which allows me to get a royalty every time this NFT is shared. Now, I'll come and shed light on this later, but let's go with the flow. So I create 10 NFTs for my super yacht, and I float it in the market for $400,000. Now, people, why will they buy it? They will buy it because me being the luxury yacht owner, me being probably a millionaire or billionaire or owner of a successful or well-established company, I tell people that the people who own my NFT get access to my luxury yacht a couple of times in a month, where they can be part owners of the yacht by showing their NFT. Because the NFT has an encrypted smart contract which allows you to prove ownership through fingerprint or through retina scan or anything else. So a person who owns this NFT, he will basically get an asset worth more than $10 million for partial amount of around $400,000, where he goes for his premium meetings in this yacht. He spends a couple of days in a month, and he uses this yacht, and he uses this for probably a year or two. And eventually, and also a part of the NFT club would be, this NFT creator would say, okay, fine. So once in a quarter, I will allow these NFT owners of my product to come to my office, or to meet in a common beach house party, where we end up meeting together, and I will bring my successful business colleagues who are well established in this field, who would be multimillionaires or multi-billionaires, and we will interact with the NFT owners of our assets. And this way, you can propose your idea, you can get their mentorship and learn from them. This is something which is happening in the NFT marketplace. NFT clubs, Board Ape Club, you're talking about CryptoPunks. All of this are created by multimillionaires, and they conduct quarterly events, beach house parties for 3 days or anything like that, which has been happening in the markets, where these people the NFT owners go there, meet with these people, learn from them, interact with them, connect with them, and they end up being a part of this club. And eventually, if they don't want to be a part of this club, they end up selling this NFT in the market for a much higher price based on the demand of the market, or the NFT which is being created. And most of the time, 90% of the times, the NFT fetch you a significantly higher value when it's resold. And the most interesting part, when this guy is selling it to someone else in the market, the actual owner of the NFT who created the NFT gets a royalty, probably 5%, 10%, or 15%, whatever he incorporates in the smart contract. He gets a royalty on every sale of NFT in the market. This is how the NFT market space, or this is how the Web 3.0 market space is evolving. This can be done with mansions, where the houses can be given on 3 days or 2 days or 4 days rent, because at the end of the day, these assets are left idle and this can be used. Similarly, NFTs can be, what is the use of these NFTs? Why are people creating NFTs? Eventually, in the future, in the Metaverse, NFTs will be, say, for example, you have created your office space in the Metaverse, the carpet, the table, the portraits, your clothes, everything, anything and everything in the Metaverse which you own, the digital assets will be NFTs. These NFTs will become your digital assets. These digital assets will become your digital net worth, and this digital network will help you grow in the metaverse in the future. That's exactly why so many people are flooding towards NFTs, hoping that this will be an early penetration in the new trend. Let me give you another example. Say, for example, we go to a showroom, something like there's a famous showroom in Dubai for jewelry. Say, for example, they are. Okay, let me put it this way. Tanishq. Tanishq is one of the very leading brands in India when it comes to jewelry. So Tanishq creates a showroom in the metaverse, which allows people to walk through the showroom, and they make virtual videos of their jewelry designs, and they post it as NFTs in the virtual showroom of theirs. And what happens is, whoever owns this NFTs get access to the physical jewelry, number one. Number two, they can also get access to a contractual based jewelry. Say, for example, when you go to when you go to United States or other countries, you can buy an Apple phone on contractual basis, on a monthly basis, certain value is deducted. Similarly, with NFTs, what if these jewelry showrooms create NFTs on contractual basis, where people come to regularly buy these NFTs, and they can constantly upgrade their jewelry based on the design which is coming in the market. So if why would people want to have idle jewelry lying down in their house when they can go and they can use different types of jewelries as and when they require for different events? If they want, they can keep it and they can own it. If they want, they can return it, or they can exchange it to a much higher jewelry and upgrade the jewelry based on the requirement they have. So these are different perspectives of how you can see the metaverse is working towards. The next aspect of NFT, how generally an NFT marketplace works and how it is created. Few examples of NFTs, probably degrees can become NFTs, certifications, logos, patents, house, anything and everything can be represented as an NFT, provided you can prove the ownership in the smart contract. NFTs generally can digitally represent any asset, including online only assets like digital artwork and real estate as well. How to create an NFT? It's very simple. You create the artwork, and the artwork you have to select a marketplace, whether it be OpenSea, whether it be Rarible or any other platform. You select the marketplace, and then eventually from the marketplace you integrate the NFT into your crypto wallet, and from there you connect the wallet to the marketplace again, and you upload the artwork in the marketplace and you list it as an NFT for sale. However, there are a few technical things to it. You have to integrate quite a few other patterns of things inside to be able to launch an NFT. If at all you require understanding of that, we can always, that's a topic separately which has to be discussed. Just something which we can laugh at. Generally, right now, what is the difference between an NFT and a degree? An NFT costs $100,000. A degree probably costs $100,000. An NFT is an asset, yes. Degree is a liability because you have to pay debts or interest payments have to be made. The resale value of NFTs generally fetches you back a maximum of say 25% lesser, or at least 25% higher. You cannot sell your degree, which eventually what happens is the NFTs are unique and you have only one NFT with single ownership. The degrees are generally generic, and they have bachelor's or liberal arts, something like that. Time to acquire 4 to 6 minutes. Time to acquire a degree is 4 to 6 years, and it can also be a cool monkey. So this is just something which just something which can laugh out at how the world is changing and how fast things are changing when it comes to the Web 3.0. A few successful NFT projects which has happened in the last probably 1.5 years is the Merge NFT, which was sold for $91.8 million. Then you have the first 5,000 days painting, which was integrated as a digital artwork and was sold for $69 million. The Board Ape Yacht Club was again integrated, and they sold 75 NFTs initially, each worth around $267,000, and many other successful celebrities had also bought it. Now coming to the most interesting aspect of Web 3.0, as we have understood that in the metaverse, the Web 3.0 has integrated so many different aspects, including the metaverse, NFTs, cryptocurrencies, and also blockchain technology. Let me help you understand what is a DAO. A DAO is a decentralized autonomous organization. A DAO basically is creating a company in blockchain or in the network in the Web 3.0, run exclusively by smart contracts. It's a decentralized organization which is completely automated, an organization which runs completely on smart contracts. A DAO is an organization which is represented by rules encoded as a computer program that is transparent, that is controlled by the organization members. A DAO in its physical form is basically a company which does not have restrictions country-wise. Once you establish a DAO, it's like establishing a country in all the 180 plus countries in the world. Wherever there is internet, there is your company. And this DAO can be integrated with any local bank accounts, can be integrated with any transact any local finance players. It's very simple. We have to integrate the Web 3.0 with the Web 2.0, and that bridge will allow you to transact in the DAO. And this allows anyone and everyone to see what sort of transactions happening in your DAO and how exactly it is allowing you to grow your business and where exactly you're expanding your businesses also. So DAO is something which is going to be the future of business, which is going to be the future of growth, because this helps you integrate or bring in investments from any part of the world. This also helps you establish your business aggressively and help you grow in different countries without the hesitation or without the problem of being able to penetrate into different countries, getting different approvals and different licenses. This is something which is fascinating right now in the Web 3.0 era. Just to give you a working example of how a DAO works, this is just a hypothetical example. Imagine that you're creating a DAO probably in the Ethereum network, and this is basically exclusively for election. And a country holds an election and wants to prevent voter fraud, probably in the United States. They want to do this, and they create a DAO which is created to safeguard transparency, eliminate vote rigging as well. And this DAO is created with these smart contracts, which is incorporate these conditions that beyond a certain these smart contracts will have that one needs to hold the country citizenship. They need to show their identity proofs that has to be incorporated, and anything other than a single vote will be considered duplication, and many other aspects like that. So this DAO is incorporated with smart contracts, and voting tokens are issued to everyone who's eligible to vote. These tokens will be in again smart contracts in terms of crypto tokens. And by crypto tokens, I don't mean currencies. Crypto tokens can be of different purposes and different varieties. And these crypto tokens people deposit in the account to vote. And once the vote happens, immediately every vote is recorded and processed on the blockchain, which ensures transparency while allowing everything to be run by itself and to help it be completely decentralized. So this is a simple way how the DAOs have been used probably for political security in different countries. Other than that, countries like Australia, countries like New Zealand, and countries like a lot of China and many other countries have used DAOs for government projects, for joint ventures, for shipping projects, and anything and everything when it comes to bringing in investments and joint ventures from different parts of the world. A DAO is very useful as it helps secure investments, and it also helps create a strong structure for the company. Now coming to the most important structure, that is, let me help you understand. We have spoken so much about Web 3.0. We have spoken about so many different aspects of Web 3.0. But do we understand what is the most common thing which is there in Web 3.0? The most common aspect of Web 3.0 is decentralization. And it is the fact that data is completely decentralized and the ownership of network is there in our hands. Now, having said this, how is it that we can secure the transactions? How is that we can secure the data? Who is authenticating it? Who is validating it? Who is distributing this data into these blocks? How is it actually happening? We all say that it's smart contracts. Yes, we all say it's decentralization. But how exactly it is happening? This process of verifying data, this process is called crypto mining or blockchain mining, which helps you record different forms of transactions which is happening in a public blockchain, and it helps distribute these transactions in different blocks in the network. Now, in simple terms, if I have to explain you, it's like creating a supercomputer and renting it to the internet, and every time the supercomputer does any transaction randomly, you get paid in cryptocurrency. So this is something which is very aggressive right now in the market. Crypto mining has become a huge trend in the market because it's helping people earn revenue passively, and it is helping people earn revenue aggressively as well. And crypto mining, if I have to explain you how it generally works, and I just give you a small demonstration of what we experience when it comes to crypto mining in the last couple of years. So this is this is just which I'm showing you because it's a public forum, so I can show you something which is restricted. So this is my probably a wallet ID which I have. Anyone can put this wallet ID. Since it's a decentralized network, anyone can put this wallet ID and they will know exactly what I have done in terms of mining, or what has happened in my transaction or in my wallet. But no one will know my name because I've showed you the wallet ID. Now you know that it is my personal wallet. We have mined around 1.2 Ethereum in the last couple of months. We have an average hash rate of 555 megahashes per second. That's approximately around 5 billion transactions per second. And this is something which aggressively allows you to generate revenue, the amount of transactions you do, the amount of verifications you do. This is how the blockchain transactions happen. So you get paid in cryptocurrency, something worth around $2,520 worth today's value, based on the algorithm or based on the computing capacity which we have. So mining as such are of different forms. They have something called proof of work. You have something called proof of stake. Depending upon what is your comfort zone, you can actually look forward to mine as well. So this is a rough outline about crypto mining, and let me finish off by thanking all the members of the Super 25 for having me as a part of the event. It has been a pleasure to speak amongst all of you, and I really hope that Super 25 becomes not only pan-India, but also becomes a global event internationally in different parts of the world. Thank you so much for having me once again.
Sounds good, Gibran. Can you move on to the alternate slides?
Yes, I'll do that once again.
Okay, sounds good. Thank you. Yeah, next slide, please. Next one. Yep. Ravinder?
Yeah, I'm there.
Go ahead, sir.
Yeah. Okay. Hello, everyone. My name is Ravinder Hundal from Espresso onboarding team. We are Espresso, and we are committed to help traders. Espresso is discount broking company under a Sher Khan group of companies. For more details, you can visit our website myespresso.com. Next slide, please.
Yes.
Yeah, next one. Next one. Next one. Next. Okay, thank you. We are providing best-in-class charting solution for every type of trader and investor. As a trader, you do analysis, so you need on-chart and off-chart indicators. Yes, we have 80+ studies in bench. We try to provide all advanced tool which will help you out to marking zones, lines, and complete your study. We also have chart compare, so you can compare any stock, any indices, or any contract with anyone. Also, as advanced, we provide percentage, log, and linear chart. You can also place orders from charts. Next slide, please.
Yes.
Yeah, thank you. We have a very unique offer for traders, pay when you profit. So as an intraday trader, you don't have to pay brokerage on loss-making trades. We have zero brokerage for delivery trade in cash market, free auto square off for MIS. We have split order. You can place large quantity order in one order. We have 350+ cash market script for MIS trading. You can place bracket order for Nifty, Bank Nifty. You can place aftermarket orders. Also, you can apply for pre-IPO orders. Next slide, please. Okay, you can customize your screen the way you want. You can add multi-widgets, different screen layout, live IV, and easy order placement from bid ask price. Also, you can drag drop straight to bulk order for strategy orders. We are developing more advanced features for option traders. And for more details and account opening, you can visit our website myespresso.com. And also you can check out our YouTube channel Espresso Invest, where we have demo videos for all features. Thank you all. Over to you, sir.
Okay, sounds good. Next slide. Next slide. Next, stay there, please. Okay, friends, here is my special private invitation to Traders Conclave 2022, India's largest retail stock investors and traders residential conclave, happening in Bengaluru in the month of September at Hotel Hilton, close to the airport. So it's going to be a 3 days program with 8 sessions, competition, quiz, prizes, awards, and celebrations. All right, so next slide, please. Some amazing speakers are joining us on board: a 200 crores quant fund manager, a GAN expert, an Elliott Wave expert, a $1 million fund manager, one of the best known positional weekly option writer, and one of the straddle players. Some great speakers have been lined up. Next slide. Okay, so an excellent combination of events, competitions, all right, discussion, celebrations. All right, it's almost worth benefits worth 55,000 jam packed into, along with valuable knowledge and best memories jam packed for you. Next slide. An event of this magnitude generally cost some organizations charge about 50K, 75K, but this program has been beautifully designed into a lovely package of 24,999 only. Grab the early bird seats now. Log into www.tradersconclave.com. For more details, talk to our conclave manager or buzz him on Telegram at Traders Conclave. Next slide, please. Okay, here is the 17th quiz of this series, which is the latest cryptocurrency crashed to nearly zero. Fill up the blanks, fastest fingers first. Which is the latest cryptocurrency which crashed to nearly zero from almost $120? Okay, next slide, please.
Yeah.
So the winner will get access to Option Omega and Intrazon conference for free with lifetime access to recordings. And there is a man of the Super Series award for one winner who should win at least 3 times. There are many competitors, and the highest guy will get to be a part of the family. He will get good educational goodies worth 100,000 from Traders Gurukul. Thank you very much. Next slide, please. And the answer for the previous quiz: the bull trend starts when price rallies above the previous high. The winner of this series is Mr. Shankar. Congratulations, Mr. Shankar. Look forward for your participation in the Man of the Series award. Next slide, please. Okay, now it's time for Q&A. Friends, go ahead, shoot your questions. Let us hear from Mr. Gibran on the various aspects of cryptos.
Absolutely.
Okay, one question by Mr. Shankar. What are the hardware crypto wallets that are most secure to store cryptocurrency? Which of them is available in India for common men?
You have something in Amazon, which basically is a hard wallet. It comes in different brands and different names. One is which one called one is also a hard wallet which comes from Dell. There's something which is very accessible. It comes between a price range of 5,000 to 10,000 rupees, and depending upon the features and the facilities they have. So that is something which you can use for storing different forms of crypto assets.
Sounds good. Okay, so given the what is your view on the recent fall of the cryptocurrency market?
So there have been major aspects of it. How in the last 3 months there have been a lot of change which has happened. This was expected generally by crypto traders who have been trading in the markets aggressively, including us. We were expecting a correction. We call it a crypto winter, where all these people who came for the pump or just for the rally and just to enjoy, they will be eventually weeding out, and the rally will again grow into the next bull trend. So this is something which happens every 2 years in the crypto market. And after last year's bull run, which made Ethereum go to approximately 3.8 lakh rupees and Bitcoin touch approximately 60 lakh rupees, it was expected that there will be a correction. And there were other reasons also. One was the war, the Ukrainian and the Russian war, which was bringing the markets down. Number two was the interest rate hike by US and by many other countries, India also. And third was a huge amount of taxation by the Indian government, 30% tax, because India is the highest user of cryptocurrencies or crypto trading in the world. So the highest number of crypto traders in the world are in India, and one of the highest miners in the world are also in India, among the top two, top three. So because of this 30% taxation, a lot of exchanges have replaced or relocated themselves to Dubai, and a lot of traders who were aggressively trading had stopped trading. And last but not the least, the fall of Luna had a significant impact in the crypto market. The moment Luna had fallen, it's the other way around. People might be thinking that because the crypto market has fallen, Luna fell. It's actually the other way around. Because there was a targeted attack on Luna, the fall on Luna created a panic, which made many stable coins go down, and including Luna's assets. The Luna management had to sell $13 billion worth of assets to stabilize Luna, and eventually they couldn't stabilize it because of the panic and the selling pressure. So there have been a lot of scenarios which has happened. But however, if you see the last 10 years, how the crypto market has evolved, this is something which is normal, and this is something which will take the markets out. Generally, before it was more fluctuative because it was a very niche market and not many people were involved. But now, as the crypto markets became $2.5 trillion worth markets, it's becoming a little more stabler. But hopefully, in the next couple of years, we will see the crypto markets will become like commodity markets, much more stable than normal.
Sounds good. So, okay, what do you think is the future of Luna now?
At the moment, Luna has been delisted by a lot of exchanges. However, if you follow Dukwon and the Terra Foundation page in Twitter, you will see that they have recently put up a new proposal, a new white paper, where they will be airdropping and they will be swapping a lot of existing Luna holders with new tokens and new currencies with a unique governance and different strategies. However, Luna does not have a big future, but probably it could be something, even probably it could be somewhere around 5 to 10% of what it was before compared to the huge valuation. But it will be something which could be a little bit of respite for the people who had invested huge amount of money. But they are aggressively active in Discord, in Telegram, in Twitter, where they are talking to the crypto community, the lunatics they call it, the lunatics community, where they are coordinating with them, they're discussing with them, and they are helping them understand what they're up to. But I feel that the trust has shaken over Luna, because being a stable coin, they did not have any stable assets, and having pegged themselves to USDT, they did not have the supply of USD in their what do you say, in their hands as well. So it was a pure probably play, I would say, by the members of the management of Luna, or it could be you could say a big immaturity in their aspect, because these technological people are very good when it comes to the technological platform, but they don't have any idea about how economics work and how this demand and supply can actually bring the markets down. So currently, stable coins have different forms, but this type of stable coin is called algorithmic stable coins. So algorithmic stable coins are something which you have to be very careful of. They are very fluctuative, and they can be easily attacked unless until you're not backed by some strong assets.
Sounds good. Okay, statement by Yogesh. He says, no question from my side. This is totally a different topic for me. Maybe future for our kids, as we're familiar only with stocks and options. Our kids will probably trade cryptos as they grow and become regulated. Okay, a question by Naresh Kumar. How can one become a crypto miner?
It's very simple. It depends upon what type of network you want to mine, number one. Number two, if you want to become a crypto miner, you have to create a supercomputer based on different assets and hardware. That is, you need to buy GPU cards. You have to compile a supercomputer or a mining rig, we call it, or a mining farm. And then you have to integrate it with a couple of softwares, and then you just connect it to the Web 3.0 and start doing transactions either through a mining pool or either as an individual. So depending upon how many verifications, authentications, how many blocks you it's something which can be done, something which can be also helped in terms of franchise also. We can also help people establish their own mining rig sitting at home. We can guide them in terms of how they want to create a small mining. A mining rig doesn't have to be really big. It can be very small. It can be based with your phone. It can be with your computer. It can be anything and everywhere. So that can be something which depends upon the appetite of the person who wants to get into mining.
Sounds good. So a question from Rajesh. What is the fundamental of a cryptocurrency? If you want to define cryptocurrency in a simple sentence to a common man, how do you explain it?
Cryptocurrency to a common man, how do we explain it? You can just simply call it a digital asset. It's something like how you do, say, for example, when you go to Google Pay, when you do a UPI transfer, that transaction happens through UPIs. Here, the transaction will happen in a similar technology like a UPI, but it will happen from a block to block. So the transaction will not be centralized, it will be decentralized, which allows it maximum security. So in simple terms, a cryptocurrency is just a digital asset which protects data.
Okay.
There are a lot of other definitions to it, but if a layman has to understand what is cryptocurrency, probably in 30 seconds, I would say it is a digital asset which works on encrypted technology to protect data.
A question from Mr. Anand Joshi. Can we become a miner? Is it legal in India?
India has legalized, I mean, there are a lot of question marks around it, but however, it's completely taxed now, and it is absolutely legal in India. So you can do mining wherever you are.
Sounds good. So which is the most popular exchange for cryptos? Which is the best exchange to trade cryptos in India?
In India, you have two exchanges which are really good. One is CoinSwitch and the other is Coinbase. Sorry, Coinbase right now is not that comfortable in India, but you can use CoinSwitch and WazirX. WazirX is a subsidiary of the world's biggest crypto exchange, Binance. Binance is the world's largest crypto exchange in the world, and I would say that working with Binance is really comfortable and it's safe and secure and very fluent as well. Since Binance is very advanced and people who are new to crypto markets will not be able to understand that, they can go with CoinSwitch and WazirX in India. It's very comfortable. It does your proper KYC, and the transactions, depositing and withdrawals are also easily done.
Sounds good. Last question by Mr. Ganesh. Is crypto mining profitable? If yes, what is the risk?
Interesting. The thing is, many people feel that crypto mining is not profitable because I believe that risk comes from not knowing what you're doing. So that is the definition of risk. So for us to eliminate risk, we have to know what we are doing. To know what we are doing, our USP is when it comes to mining, we reduce the power consumption of the mining rigs by 2/3, and we increase the algorithmic hashing of the rigs by double. And we do it by our customized software which we had created and which we have been using for the last 1.5 years. And this is a trademark software of us. This software reduces the mining power consumption by 2/3. So say for example, each card, if it's taking around 330 watts, we reduce it to 110 120 watts. And if each card say around mines around 40 mega hashes per second, we end up multiplying it to 60 to 62 mega hashes per second. So we double it. It's not double it, but 50% we increase it. But with some cards, we also double it also. So this is where our USP is. So if you know exactly how to do it, number one. Number two, you need to know how you can reduce your power consumption, because that's the only liability you have. So if you can go on solar, or you can do any other form of reducing your power cost, that's absolutely great.
Sounds good. Okay, sounds good. We can probably move to the last slide, my friend.
Perfect.
Cool, sounds good. With this, we come to the end of the session today. Mr. Jubran Siddiq, thanks for your insightful session on cryptos. On behalf of all the participants of Super 25 3.0, the Money Control Pro team and the Espresso family, and all the extended family members of Traders Gurukul, we express our sincere thanks for joining the event and sharing your knowledge with every one of us. Thank you very much, Jubran.
Thank you so much, Ashok, for having me here. It is a pleasure to get introduced to you and to know your team of Super 25. It's been a memorable experience, and I really appreciate all the work and the hard work you put. And more power to you and your team. And I really hope to be more actively involved in all your initiatives in the future. And I was supposed to complete my session probably in 60 minutes. It got a little earlier, probably in 10 minutes earlier we finished because the video couldn't relay. However, but my apologies for that. Thank you so much.
No problem. So friends, that's the story for today. I hope every one of you enjoyed the session. I will see you all tomorrow at 8 p.m. sharp with yet another interesting session. Until then, signing off, Ashok Devanampriya from Traders Gurukul. Good night.
Good night. Thank you.